Welcome to FOMO Consulting for your daily AMC stock analysis video on Thursday, June 24th. Ladies and gentlemen, they are getting ready for the squeeze. We are certainly winning, and as always, the apes are winning, the diamond hands are winning, and most importantly, the retail investors winning. So if you find this video informative and entertaining, please like, share, certainly comment, and most importantly, subscribe. It is a newer channel, and I would appreciate your support. Let's get into the video. Thank you, as always, to everyone who has liked, shared, commented, and subscribed. It means the world to me. Thank you very much. Let's start with a quote. Those that can bend with the wind will weather the storm. We are certainly bending, but we will not break. It's been somewhat of a one of those gray, cloudy, rainy type weeks in the stock market, at least for AMC stock. But we are certainly winning. I have no doubt that sunny days are ahead. Let's look at the broader market. Speaking of brighter days, broader market did absolutely phenomenal today. S&P up 24 points, Dow up 322 points, NASDAQ up 97 points, Russell up a huge 30 points. Overall, most sectors did very, very well. Blue chips did very, very well. Amazon and Apple were a bit down, but overall, the broader market did fantastically well today. And the banks clear the stress test. Results may boost dividends. This is fantastic news. The Fed has run three very, very deliberate stress tests on the banks regarding recessions. All the banks actually passed the test, so that is great news for the broader market, the overall economy, certainly for you and me. So let's look at crypto. Crypto, big bunch of liquidity today, a lot of buying today. Really everybody's up in green, right? Dogecoin's up big, over 11%. Certainly Ethereum's up by 5%. Bitcoin is no doubt up at 7%, at least at the time of this recording. So everybody should be happy that's in crypto. It looks like there might be a bit of a recovery on the way. We can only hope and cross your fingers. Well done, German apes. You held the line today. Certainly no different than how the American exchanges performed. But overall, I think you did phenomenally well and very, very strong performance. Again, we were under heavy shorting pressure, but overall, well done. So let's look how AMC did today. Overall, I think AMC did phenomenally well. We were certainly under a lot of heavy selling pressure. We closed at $56.70, down $1.57, down 2.69%, down a bit after hours. We were under heavy shorting today, and I'll show you why that's very important and actually a bullish indicator for us very shortly. So as you can see, that was around yesterday's close, $57 level. We had a hard time breaking today. They certainly pinned it, and 56 we actually held support very, very well. So again, we kind of traded in that $56 to $57 channel. Again, they had a purpose, and I'll show you why that's important shortly. As you can see, yesterday they borrowed 10 million shares, returned nearly 6 million. On Monday. Tuesday they borrowed 7.1, returned 6.54. Yesterday, they borrowed an astronomical 12 million, returned 11.43, and today they borrowed 7 million and returned nearly 5 million shares. So they have been shorting this very, very heavily this week, and no doubt this is related to 002, but also a strategic play, lower volumes this week. Who knows if they have an agreement just to be able to set shorts? Who knows? But at the end of the day, I am not concerned. We are clearly holding heavy support in the mid 50s, whether it's at 55, 56, 57. We've withstood their attacks with all of this heavy shorting throughout the week. So even on a very low volume day, we are in the top 10, actually ranked number 6, at least on Webull, and we are clearly the most popular stock as usual. So let's take a look at a larger picture, 15-minute chart over a period of time, about 30 days. So again, $60 level is the red illustrated line. You can see where we are clearly trending upwards. This stock has a decision to make coming up very, very shortly, at least on the 15-minute chart. As you can see, if you really look left to right, the MACD over this period of time has just been consolidating and cooling off. We've been bouncing around that channel between 50 and 60 for quite some time now. And you can certainly see RSI is in a very, very neutral place. I think this is exceptionally bullish, and we are set up perfectly for a run very, very soon. Again, this stock will have a decision to make. Let's look at a little deeper time frame, 1 hour chart. Very, very similar appearance. As you can see, $60 level we need to break. We are quickly coming up to a decision point, and we need to break that $60 level, and I believe we will do so even as early as tomorrow. So again, for our chart, as you can see, we are in a shallow MACD, kind of a bearish trend over the last really couple of weeks. They've been shorting, as we all know, but it is deliberate and strategic, and I'll show you very shortly. Again, RSI cooled off back into a more neutral stance. On the daily, as you can see, the MACD is now crossed over into a shallow bearish direction. I believe this is temporary, and likely over the coming days this will cross back over into bullish territory, but it is worth noting. And RSI again on the bullish side, but back in the channel. So again, a very, very important level is that $60 level. It's the new 14, right? We need to break it, and I believe we will very, very shortly. But as you can see, we've been bouncing in and out of this channel around the $50 to $60 level for quite some time. So this is an important view. So this goes back before we broke, this is back in early May, before we broke that $14 critical level. This was leading up to earnings. We had, I think, 8 or 9 red days in a row. They shorted us down. As you can see, the MACD crossed over shallowly, but we were in a more bearish direction, obviously, and the RSI was shoved back into the neutral direction. Shortly thereafter, we had a massive bull run, and we certainly had lower volumes at that time. As a matter of fact, we were in 15, 16 million for the day at one point in time. We were kind of averaging around 30 million or so at that time. So again, I am not worried about where we are from a consolidation standpoint. As you can see, and everyone knows that's been in it for quite some time, consolidation is good, but I believe we are setting up for another bull run. So AMZ voting window has opened. Cast your vote whenever you feel. Vote your conscience. Vote what you believe. So let's look at the short interest from today. So there were three more institutional buyers that bought in today on the long side. That is very bullish for us. Shares on loan went up just a bit, almost 94 million. Utilization is around 87%. Short interest went up substantially by 2.29%. We are at 14.42%, increasing by the day. And the borrowed shares again, 7.1 million borrowed, 4.97 returned. According to Fintel, at the time of this recording, 950 shares available. Borrow fee 1.63 on a total volume very low of 79 million based on recent history. So let's look at some short interest trend data here. So this is the average age of shares on loan for the short positions. So in early June, mid-June, 58 days at its highest point. 37 days is the current number. So they've carved off almost 20 days. So nothing fundamentally has changed. The shares on loan is still going up each and every day. We're around $94 million, as you can see, but the cost to borrow has gone down because they're limiting their risk. So back, in April or whatever, when this was around $10, they were at 58 days, right? So currently, obviously, we're having a very tough time breaking through that $60, $62 range. And I believe we all understand there's probably an invisible sell wall there, not allowing us to rise. Who knows how many shares are sitting there? It could be 10 million for all we know. But nonetheless, they've been pinning the price. We've been in this consolidation period, but the data would lead you to believe that they are certainly simultaneously covering and reshorting all at the same time. Again, this doesn't affect the short squeeze scenario, but they have lowered the cost to borrow substantially, and the utilization is certainly down. So nothing fundamentally, again, has changed in the overall scenario other than the amount of time they've been holding these shares, and the cost to borrow has gone down substantially. So what I want to show you here is on the left is Tesla. So this goes back to the July-August timeframe of 2020. So as Tesla was making its run up, we all know it was heavily shorted. As you can see where I have that yellow arrow, Tesla had a big pop. It ran up substantially, but then you look, it had a consolidation period. If you look down below that arrow, you'll see where you had a bearish MACD crossover, kind of a consolidation period. Didn't lose a lot in the price action, but certainly in the momentum, right? And the RSI was in the overbought. It had to come back into the channel and kind of cool off. But as you can see, shortly thereafter, about 3 weeks from that initial run up, you can see where things calmed down. There wasn't a lot of price action, but 3 weeks after, it popped. We are now in that consolidation period. We have been in a consolidation period, go figure, about 3 weeks. I believe we are poised for another breakout, as I showed you earlier, based on the charts. So this stock has a decision to make very, very shortly, in my opinion. So again, short interest is increasing, as you can see by the short interest trend lines. Nothing has changed fundamentally. We are still in a short squeeze play. So let's look at the options. We all know Friday are all about the options chain, right? So currently we're at the $56 strike price in the money. 60, as you can see, is a heavy grouping of open interest. 65, another grouping. 70, another grouping. If we close above 56 tomorrow, that currently we have 70,000 calls in the money. If we close above $60, we'll have another 48,000 in the money. We close above 65, we will have another 42,000 in the money. I firmly believe some of the whales, the heavy investors, they're going to press this price upwards tomorrow. I believe 60 is back in play. If they could get it to 65, they certainly will. But I do believe getting above 60 will be a major initiative for the bulls tomorrow. So we'll see how it plays out. So as you can see, decent volume today, but overall call to put ratio still around that 2 to 1. Not a huge amount of trades today on the options, but certainly very bullish. As you can see here, call to put ratio is about 2 to 1. No doubt the volume today or this week, excuse me. And as you can see, call volume 527 to 293, certainly bullish. Open interest for this week, as you can see, calls outweigh the puts. Always fun to look at. This has come down just a little bit, just simply because we've been shorted. We're in the red, but nothing fundamentally has terribly changed. So let's close with a quote. Commitment. Staying loyal to what you said you were going to do, long after the mood you set it in has left. Some days it's easy to be committed when it's green, right? 10% days are always easy to find commitment. Red days are a little harder, right? But overall, just when in doubt, zoom out. Look at where we are. Look at where we're going. Look at what's happening each and every day to the stock. It's part of the process. Again, make your own mind up. Do your own due diligence. Certainly not financial advice, but commitment, diamond hands, retail investors, we are winning. So if you found this video informative and entertaining, please like, share, certainly comment, most importantly subscribe. It is a newer channel and I would appreciate your support. But as always, thank you very much for watching, and I hope your life is full of green candles. I'll talk to you soon. Bye-bye.